Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, July 27th through Friday, July 31st, 2009. Well, folks, as we get into today's Weekend Technical Analysis Update, I really want to focus in on what happened last week. What have we seen recently in this monster run in the markets, and what does it mean going forward? I mean, let's be honest, earnings have come in very, very well, but the bottom line is not looking that healthy, and I think the markets are somewhat kind of misinformed or misjudging the overall market, and that's what I really want to talk a little bit about today, because what you're seeing is earnings generally beating, and even if they're not, the market is still seemingly rallying, like on Friday after Microsoft's earnings. In all fairness, the market should have gotten smacked, and it didn't. In fact, it ended flat on the day after the monster upswing on Thursday. So you have to look at this and say to yourself, okay, well, the bullishness is no doubt out there. It's inbred in this market right now. People don't care. All they think about is buying, 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 and the markets are reacting. The question is, how long can that go on for? Because as I mentioned at the beginning of this video, you have earnings that are beating. In all fairness, the earnings are beating, but the revenue numbers are declining. The revenue numbers are either just in line or missing estimates coming in weak. Now, right now, as I said, the market does not care, but at what point does the market start to care? Because the big issue here that you're going to really start to have to focus on as we get very, very extended on the intraday and on the daily and on the weekly charts, away from moving averages and so forth, is how long can that last? How long until people start to realize that this market needs to focus in on the underlying growth of the companies? And these companies are not growing. They're actually shrinking. But at the same time, the numbers on earnings are beating, and that is helping the market get a bid. So you have a lot of characteristics going on here, underlying things going on that have to really be paid attention to. Now, as I mentioned, last week was a huge up week. Really, we've had 2 weeks in a row now with the markets just rallying off the charts, and you can see that on the 60-minute. Let me show you the 60-minute chart here. Look at this move from basically the low 87, which was a good little indicator. We called that bottom perfectly for the move up. The move up was absolutely drastic and huge, and now you've had a monster move all the way up from basically 87 to 98. That's 11 points on the SPY in a matter of basically 2 weeks, a max 2-week period, from the early portions, the 8th, 9th, 10th of July, all the way now to the 24th. So in basically 2 weeks, half a month, you've had a monster move of over 10% in the overall markets. Now, the question is it going to keep going on Monday? Are we going to see continued upside Tuesday, Wednesday, Thursday, Friday? Because in all fairness, you do have some scenarios here where the market could go higher. What are the scenarios? Well, first of all, Monday, generally light volume, right? Light volume, just like Friday, does not allow for much downside. The volume on Friday was our second lightest trading day of the year. The week ago from Friday was our lightest trading day of the year. So when you have light volume in the markets, generally bidding, propping, trading desks at Goldman Sachs, they can all keep the market on a bid, push the market up, squeeze the shorts, do whatever they have to do very, very easily to get the market afloat. And that's also what you're seeing out there. There's no doubt in my mind that you are seeing propping going on. You're seeing a little bit of manipulation. Let's be honest, folks. The market these days is not really a market anymore. It's 70% of the volume is made by about 2% of the institutional traders out there, 2% of the overall market participants. That's just the way it is. So if they want to do something, they're going to do it. So again, you have to just take that with a grain of salt, understand the characteristics of a light volume midsummer trading day on a Friday or Monday. As I said, Monday again, light volume. What does that mean we're going to have? We're going to have another floating up day. That's possible. We'll have to watch this. Again, after the monstrous rally off of the earnings, all those earnings disappointments from Thursday night into Friday, the market had an unbelievable rebound. We had a pretty hard sell-off early in the day, as you can see here on Friday, and then the market hit a trend line right here, which again, this trend line goes all the way back days and days and days, and it touched right here. You had a perfect hit, perfect pierce of this one right off of this. As you can see, you bounced right off of this line, came down, breached it, didn't confirm the breakdown between this line and touched this one right below it, and then started to rally in spirit of bull flag, rally in spirit of bull flag, rally into the close. Where did we close? We closed at a double top beautifully from Thursday's highs. So Thursday's highs closed right there on Friday. That is going to be near-term resistance unless we gap above it again, and then that may be a little bit of support. So we'll watch that and see how that really plays out. But bottom line is, folks, this market is in a head of just not even paying attention. It's got blinders. Imagine a horse with blinders on it and just looking ahead, Things are going to get better. Optimism, positive statements here. Oh, they beat earnings. Let's rally the stock even though it missed on revenues, which underlying revenues are more important because if the company's shrinking, guess how long they could cut costs. And again, that's what I referred to at the beginning of the video, is that they're cutting costs to beat these earnings. That's what they're doing. Don't be fooled by that. And I really want people to understand that if you're watching this video, if there's one thing I want you to take away from this weekend technical analysis video, is that to be very, very cautious going ahead, folks. You have a scenario where these stocks are cutting costs to beat earnings, and they're rallying on cutting costs, not because the companies are growing. Now, the market is hoping right now that by the time they can't cut any costs more in a quarter or two, the economy's back on a growth stretch, which is up in the air for debate. Some of us think it is, some of us think it won't. If it doesn't, watch out below, because this market will get slammed down with a vengeance, probably going back towards the lows of March. All right, but again, that's an if. That's a big if scenario. You have a little bit of different in opinions out there. A lot of people on TV, a lot of market mavens are now on the bullish train. You have a lot of them on the train. The question is, again, who's going to be right in this scenario? You're either going to have a nice continued up move in this market, or you're going to get slammed down very hard. We're going to cover all that stuff this week in the Research Center for our premium subscribers at InTheMoneyStocks.com, and in the chat room, as always, at InTheMoneyStocks.com in the intraday stock chat. Okay, so again, you can see resistance. Resistance on the intraday 10-minute. This is the intraday 10-minute SPY. Beautiful little bullish flag patterns that can continue to play out. Technicals really worked well on Friday off of each level. One here, bounce. Two hits, bounce, bullish flag pattern, and each time getting a rally up right to a double top, which was resistance. Now, again, so resistance right here just above 98. If you come down a little bit, you have a minor level. All these dotted ones are minor levels, but your major levels come into play right over here. At the 50 moving average would be the first spot I'd watch for, and that at the open on Monday will be at 97.50. Then you'll have a big area right down here. These will diverge more and more, but right now 97.30 for now. All right, if you continue down, double bottom for Friday's low would be at about 96.70, and then after that the 200 moving average right down here at 96 with these trend lines as well. 60-minute chart, folks. You can see what you're kind of forming here. You have a nice little double top in place, but again, if we can just push through that, you may continue to break higher with the light volume on Monday. Just going over some key alerts and posts for next week, guys. We have a lot of economic news. Home sales on Monday, Tuesday consumer confidence, Case-Shiller home price index, durable goods on Wednesday, along with crude inventories. Wednesday also has the beige book at 2 p.m. Eastern time in the afternoon. Thursday, initial claims, GDP, core PCE, and then obviously on Friday, Friday has the core PCE, GDP, and chain deflator, employment cost index, Chicago PMI, and employment cost. Other information on employment right there, although the big employment number will be the week after. Earnings-wise, you have some big earnings coming this week. You have U.S. Steel next week. That'll be an interesting one to see. Time Warner, Visa next week. You also have ExxonMobil. ExxonMobil is a key driver in this market, so please understand that. First Solar is a big solar player. That is next week as well, so keep an eye on that. Again, a lot of big earnings next week, although last week was probably the biggest of all the earnings weeks. It'll start to slowly die down week after week, but next week does have a lot of key ones. ExxonMobil will really be the high one, guys. That's what really drives this market. If Exxon's up, the market's up. If Exxon's down, generally the market will be down. All right, folks, that's all for now. You can see the 60-minute chart right here. Resistance, again, just above 98. If you come down, you can have very, very good support right down here at around 97, and then below that, trading at the 96 range, 50 moving average at 95. Have a wonderful week. Be careful here, guys. You're really coming into uncharted territory based on extension move, but at the same time, light volume and propping. So it's a matter of who's going to win this battle next week. Stay tuned. We'll be touching base intraday, obviously, with the free videos, and then the premium subscribers get the 30, 40-minute videos, hardcore at night, along with everything else included in the Research Center. Talk to you then. Take care.